Hello again, everybody. Doing here from DRFX Forex and Trading. The Euro US dollar produced another strong reversal area, or reversal signal rather, at this resistance area once again. This followed another attempt by the bulls to break out above the resistance boundary of this fairly large pennant setup. But again, similar to the first instance in which the market pulled back, the bears took control and effectively took out the bullish candle and has now come back inside of the resistance boundary and the pennant setup once again. So basically we have two situations in which the market failed to lead to strong breakout in favor of the euro. So now with this setup, we basically have a situation in which we clearly are not going to be heading bullish anytime soon. These two false breakouts may appear to be a double top formation, but the problem I have with it is that the distance from each other is too wide to be considered a double top formation. Normally the highs of these two areas here would be fairly close to each other. So usually the highs are at least fairly close to each other, possibly at this area here. So ideally the high of this second false breakout would have been at this area here. But right now it's at this area here, it's too low, it's too far apart. Another aspect of it is the fact that this is the size of this false breakout is much larger than this one. And generally with respect to double tops or double bottom formations, the size of the two signals are fairly similar. So as you can see here, this double bottom formation was fairly close to each other and almost a similar size. As you can see here, this double top formation, the highs are pretty close to each other, and the size of the second signal was pretty close to that of the first signal. And scrolling back and looking at several examples with this pair, you'll be able to notice a similar pattern on this pair as well as other pairs across the currency market, as well as across all time frames. Generally speaking, the double tops usually are fairly close to each other in size as well as in terms of the highs formed. So that is why this is not really considered to be a double top formation. Now, since the bulls are clearly losing out with this battle, and we're back inside of this resistance and the support boundary and the pennant set up once again, it's clearly giving us an indication that we will eventually head back to the support boundary of this pennant. The question now is what type of setup and what type of signal will actually lead to that movement, because as you see here, we actually broke a trend line on the first occasion, and that gave us the impression that we could be headed towards support. But instead of that, the market U-turned and rallied to the resistance boundary before giving us another failed attempt to break out. So sometimes, even though the market has pulled back inside of the boundary, the setup and the signal that we see is very important, because that can determine whether or not we're actually going to be headed towards the boundary, the other side, or whether the market is going to stall and produce a U-turn that takes us back to the boundary. Now, as you can see here, this could be considered to be a counter trend line at this area here. And normally with counter trend lines, you need a strong break of them to have a strong signal to indicate that we could trade them. But as you can see here, similar to this breakout attempt with the bull candle, the distance by which the candle has broken below this counter trend line is not far enough. This is the reason why this led to the false breakout on this second attempt, and is the reason why this break of this counter trend line is not recommended to trade. Across the currency market, you will see that breaks of barriers have to be with strong candles, as well as the distance by which the candle has broken the barrier has to be strong enough, has to be large enough to justify the entry. If not, then the the situation or the trade has a very low probability of actually working out. So that is one of the traps and the situations that we need to be aware of with respect to breakout from consolidation as well as breakouts from trend lines and counter trend lines. So this is a similar situation here where even though we're getting a second attempt or second signal to indicate that the the bearish scenario is going to be the more likely one over the next couple of weeks, this signal is not strong enough to justify any movement to take advantage of that expected move. So right now we're going to have to wait to see what the market provides in terms of another appropriate signal and trade accordingly.